Welcome to today's webinar about protecting your family and saving on taxes. Let me present myself very quickly. My name is Patrick Malgi. I'm one of the founders of TaxX, the website where you can do your tax return very easily online in Luxembourg. So all along of the webinar, you will see on the bottom left of your screen a QR code that you can scan, and there you could book an appointment to get an analysis of your tax optimization potential. So basically, one of our team is calling you. This takes 10 to 15 minutes, and we are checking how you could save taxes in your personal situation. So how to save on tax in Luxembourg? So basically, you can deduct on the Luxembourgish tax return various expenses, and by doing so, you can save on taxes. And how much you could save, that is mostly depending on your revenues. We're coming to that in a second. So what is the amount of taxes you could save? But basically it depends on your revenues. Here are a few examples. If, for example, you are a single and earning a gross monthly salary of 3,000 euros, then your tax gain would be approximately 26%. If you're earning a gross monthly salary of 5,000, it will be almost 42%. And if you're earning, for example, 10,000 euros gross monthly salary, then it would be around 43%. What does it mean? But basically it means that if you deduct 1,000 euros on your tax return, then your tax savings would be 430 euros. So what are your tax optimization possibilities? Basically, you have a few ones. You could deduct interest expenses on your loans. You could deduct insurance premiums, private pension plan premiums, but also contributions to a home savings plan. On the allowances side, you can also deduct, for example, cost of childcare, the creche for your kids, or, for example, a cleaning company. We had webinars over the last 2 weeks about all this. You can watch them on our YouTube channel, on Facebook or LinkedIn to learn more. And next Friday, there will be another webinar about the tax advantages of home savings. So you can learn everything about home savings plans and how to save on taxes thanks to that. So let's get back to the topic of today's webinar. So the options to protect your family and save on taxes. Basically, you have a few ones. You could, for example, deduct life insurances, outstanding balance insurances, or complementary health insurances on your tax return. We will also talk today again about the pension plan, which allows you to set up a capital for the future, but that allows also to protect your family in case of your death. And at the end, we will be talking about the possibility of putting up savings through an investment plan. So as mentioned, you can deduct insurance premiums on your tax return, but there is a maximum ceiling that you can deduct. This maximum ceiling, it's 672 euros per family member living in your household. So for example, if you are a family with 2 kids, you could deduct up to 2,688 euros. So on one hand, in that category, you can deduct insurance premiums, for example, civil liability insurance for your car, life insurance or medical insurance. But on the other hand, there's also interest expenses on loans that are added to that category. Basically, that could be a consumer loan for your car, for example, credit card interests or overdraft fees on your bank account. So today we are talking about the life insurance and medical insurance in that category of deductions. What is a life insurance? But basically, life insurance is an investment you are doing now to protect, on one hand, your family, and on the other hand, to get the capital at the end of the contract. So in case of death before maturity, then the capital will be transmitted to the beneficiaries, which could be your kids or, for example, your partner. And in case of life at maturity, for some life insurances, you can get a capital, or the capital will be transmitted to for example, the kids. We will see a few examples in a few seconds. So what life insurance in your situation? But I will present you a few examples of life insurances from our partner Lux, with concrete examples. For example, Lux Education, which goal is to build up savings to prepare for your child's education while benefiting from additional coverage in the event of the death of one or both parents. We'll see a very concrete example. Let's imagine a couple, both 30 years old, investing 100 euros per month for 10 years in such a life insurance. Then in case of life, after 10 years, your kids will receive quarterly a payment of minimum 438 euros. So total over 5 years, because they will get that quarterly during 5 years. So in total, they will get approximately 8,700 euros in case of life. And in case of death of one or two parents, they will receive an additional amount. For example, if one parent dies, they would get approximately 26,000 euros plus the 8,760 euros minimum on top of that. If two parents die, it would be 52,000 euros. And in case of death due to a traffic accident, in case of death of one parent, the kids would receive 52,000 euros plus the 8,760. And if the two parents would die in a traffic accident, then the kids will receive 105,000 euros. And on top of that, the 8,760 euros. So tax gains, imagine that couple would have a taxable income of 100K. So over 10 years, by investing 100 euros a month, the total premiums they would have to pay would be 12,000 euros. Thanks to tax savings, they will save around 5,000 euros in taxes. So the net price to pay for that coverage would be around 7,000 euros. And the minimum your kids would get out of the contract, if you are still alive after 10 years, would be 8,760 euros. So thanks to tax savings, this makes it an interesting investment on one hand, and on the other hand is also a good way to protect your kids in case of death. Another life insurance from Lux, it's Easy Life Foresight, which basically protects your family in case of death. There also we have a concrete example. Let's imagine an individual 30 years old investing 100 euros per month in such a contract for 10 years. So in case of life for that product, at the end of the 10 years, no capital will get paid out. But in case of death, the beneficiary, so the partner or the kids, will receive 183,000 euros. In case of death due to an accident, 735 euros. And in case of death due to a traffic accident, even 1.286 million euros. There are also the same tax gains. So basically for a couple with a taxable income of 100K, they would have to pay for that life insurance 12,000 euros over 10 years. Thanks to the tax gains of 5,000 euros, at the end that insurance only cost them 7,000 euros. So outstanding balance insurance, basically it's a life insurance covering a mortgage you signed up for your home, for example. There you have two possibilities to pay that mortgage. So one possibility would be to pay it per month. In that case, you can deduct it on the tax return, but there's normal maximum ceiling that applies. So for example, 672 euros per family member living in the household. If you opt for a single premium, which means basically that you pay the entire insurance at once at subscription, at that moment, there will be a higher maximum ceiling that applies. So this maximum ceiling, it's 6,000 euros per adult person on the tax return. There will be an additional 1,200 euros per child, and per year exceeding 30 years of age, there will be another 8% added to that maximum ceiling. So, for example, a couple where the father is 40 years old, mother age 38, and 2 kids, you could deduct almost 25,000 euros on your tax return if you pay that outstanding balance insurance in one shot as a single premium. What does it mean in terms of tax savings? So basically, this family, let's assume they have a taxable income of 120K. So the taxes due without deduction of that single premium would be almost 28,000 euros to pay a year. By deducting that single premium, you only would have to pay 17,000 euros in taxes. So your tax gain would be around 10,400 euros. So if you would cover, for example, a mortgage of 600,000 euros, you would have to pay almost 25,000 euros for that insurance. Thanks to tax gains of 10,400 euros, at the end, the net price for that coverage would only be 14,528 euros. Also good to know, single premiums can be deducted every 5 years. So basically that new maximum ceiling we just discussed applies every 5 years. So for example, if let's say 6 years ago you bought a house, at that time you maybe covered part of your mortgage by paying a single premium for an outstanding balance insurance, but now you could also cover the rest of the mortgage and get also the higher maximum ceiling in terms of deductions. Another way to protect your family and save on taxes would be a complementary health insurance. There, La Lux and DKV Luxembourg are offering Easy Health, which basically covers doctor visits, hospital stays, glasses, dental care, kidney therapy, and much more. I will show you a few examples of coverages. So basically in Luxembourg, you are already covered by a CNS, so by the public healthcare system, but they don't cover every medical expenses. So a few examples: if you're going to a physiotherapist, kidney therapist, then they will take into charge. They will cover already most of it, but the part you have to pay on your own, DKV Luxembourg would take it in charge. The same for glasses. If you have to buy glasses, DKV Luxembourg reimburse you up to 500 euros every 2 years. It's the same for contact lenses. If you need, for example, 5 crowns, and this would cost you around 4,000 euros. CNS is only covering a fourth of that amount, and there DKV could reimburse another 3,000 euros. So at the end, you only end up with 292 euros to pay. It's the same for orthodontic treatment. So basically, if you need brackets for your teeth, there also DKV Luxembourg reimburses a big part of the medical bill that is not reimbursed by CNS. If you would have to go to a private clinic abroad for example, a brain tumor, at that moment you are not covered by CNS here in Luxembourg, but a DKV would take in charge that operation. And on top of that, they will give you 20 euros a day for the time you have been at the hospital. And on top of that, you have the insurance Travel Plus, which is basically a health insurance when you are traveling. Here's an example of a skiing accident where you have to be rescued by a helicopter, brought to a private clinic on the ski station, and returned to Luxembourg by ambulance. At that moment, DKV Luxembourg would reimburse you the entire amount you would have to pay for that rescue and for that medical treatment. So regarding tax gains, let's assume you are a couple, 30 years old, both with 2 kids with a taxable income of 100K. In that case, your insurance would cost you almost 1,900 euros a year. So for Easy Health for the entire family, tax gains would be almost 800 euros. So at the end, the net price for that insurance would only be 1,100 euros, so 92 euros per month. Also interesting to know, the quote for kids below 20 years, it's not even 20 euros a month. So very interesting to get coverage for your kids. because maybe they need glasses, maybe they need dental care, all set up by DKV Luxembourg. So last week we had a webinar about the private pension plans in Luxembourg. You can watch it on YouTube, Facebook, or LinkedIn. So the private pension plan, the main goal is to build up a capital to enjoy later, so basically at the age of 60, and it allows you to save taxes today. But it's also interesting to help you build up savings in case of death. So let's say you would invest 266 euros a month in a pension plan, starting at the age of 30, for example. Then at the end of the contract, at the age of 60, you will get approximately 150K out of that investment. Over the 30 years, you would have saved approximately 40K in taxes. But if you would die before the age of 60, at that moment of death, basically the money goes to your kids, for example. So let's say after 20 years of contract, you would die. At that moment, your kids would receive 83,000 euros out of that contract. So it's not only a good way to prepare your future, but it's also a good way to set up savings for the worst case scenario, because your family will get the money out of that contract at the moment of your death. What other options do you have to prepare your future and protect your family? But basically, one option would be the home savings plan. Next Friday, in a webinar, we will present all the tax advantages of the home savings plan more in detail. So don't forget to subscribe to that webinar. Another option would be a new investment plan from Lux, Easy Life Invest for Future, which basically allows you to invest in funds, investment funds, in line with your ethical, social, and environmental values. All the funds you can invest in are labeled by LuxFlag, which is basically a label that gives you the certainty that your investments are ethical, social, and all environmental. How does it work? But basically, you can start such investment plan with a first payment of at least 1,000 euros. And later on, you can invest a minimum of 50 euros per month. There are no tax deductions linked to this investment, so you cannot deduct those investments on your tax return. However, at the end of the contract, for example, after 10 years, there is no taxation on the capital you will get out at that moment. What's also interesting, and there the best is to contact us if you want to have more information. You can combine capital protection with performance of investment funds. This means that you could, for example, choose to invest 50% of your investment in investment funds and 50% in investment with capital protection, where you're sure to get a certain amount at the end of the contract. So which products are suitable for you? But this depends basically a lot on your family situation, on your revenues, and on your age. So to know more, you have different possibilities. One would be to do your tax return on taxx.lu. So there, at the end of the process, when you have done your tax return, automatically you will see an analysis of your tax optimization potential. So you can see exactly in your situation at your age, with number of kids and everything, you can see how much taxes you could save in the future, and you can get in touch with us to help you to subscribe to those contracts. Another possibility, if you have done your tax return in the official PDF, you can go on taxx.lu/simulator, where you can upload your PDF. And after a few seconds, you can see the same analysis. So basically, you see what can I deduct more and how much taxes could I save thanks to those deductions. And last but not least, you can also schedule a call for personalized analysis. Just scan the QR code, choose a date and the time you want us to call you back. And in a 10-15 minutes call, we will analyze your situation, and we can tell you exactly how much taxes you could save with the different options you have. If you have questions about your tax return or about tax optimization, don't hesitate to contact our customer support team at help@taxx.lu, and we would be glad to help you with your tax optimization and also your tax return in general. So enjoy your weekend. I hope I see you again for the webinar of next Friday about the home savings plan. All the webinars are also on YouTube, Facebook, and LinkedIn. And don't hesitate to contact us if you have more questions. Enjoy your weekend. Bye-bye.